The second forecast is what is called the affordability crisis in America. And that forces interest rates to go higher, even though Trump doesn't want it, and we'll go into that. The US people now pay 30% more for food than they did 5 years ago. Affordability. Consumer prices as a whole up only 22%, but food prices and housing prices, which is what they actually spend their lives on, affordability, 30%.
Yeah. So I think that this has been the real issue in America, which is that the number one issue which is responsible, in fact, for taking down Trump's approval ratings is the fact that inflation in America for many people is still too high. So, the basic stuff that they're buying, groceries, food, is high. In fact, electricity prices are up even 40% over this time period, partly because of AI.
Wow.
And especially,
Yes.
because they're consuming much more electricity in some areas, particularly like in areas like Virginia and all, where lots of data centers have come up.
Right.
So I think that's the real concern, which is that food prices, other prices are still up a lot. And so therefore, and those prices have started to moderate in terms of their increase over the last year. But their inflation in America is still close to 3%. And America has not lived with this kind of high inflation in a very long period of time.
3% is just the norm, but food and housing is double that almost.
Yeah, in terms of that's what's happened in the last 5 years.
Yeah,
This is 5 year data.
5
The
years,
annual
yeah.
inflation has been 3% in America, and 2% used to be the target. Now, America has missed that target of 2% for 55 months in a row. So, that begins to compound over time.
Right.
That you keep sort of having higher and higher inflation, and so therefore lots of people are concerned about it and are not feeling that good about their well-being because of the fact that inflation is still relatively sticky, even if it has come off the peak. And that's also hurting Trump's approval rating.
Yeah, and he's now distributing more money. So it's obviously making a very negative reaction to the government.
Yeah. And I think that that's the issue that I feel, which is that there's a risk, in fact, that he wants interest rates to come down.
He wants it to come down.
But my fear is that if he spends more money to try and please people, interest rates in America, particularly the ones he doesn't control, could go up. He's trying to sort of put, friendly people at the Fed and try and push interest rates down. But long-term interest rates may start to go up if they begin to lose credibility in the Fed and what happens in America. So that's one of the concerns. And very interestingly, that in the rest of the world, in fact, interest rates, particularly long-term interest rates, have been rising.
In fact, this affordability crisis, prices going up, basically because there's excess money in the market. So the Fed or the reserve banks want to raise interest rates. And it's happening all over the world, as you just mentioned. Japan up considerably, Korea, Germany, France, interest rates have been going up. America, he wants to bring it down despite this 30% increase in food.
Yes, that's right. So I think that, I just feel that he's got this ideological thing coming maybe, from developer background, that he wants, that he believes in lowering the cost of financing. But the issue is that for many people, inflation's hurting. And a very important country to watch is going to be Japan. Because I feel the fact that Japan used to be a country which suffered from deflation for years. Now in Japan, interest rates are going up because inflation there has come back in some way. And the central bank has been dragging its feet to raise interest rates too much. And they have a lot of debt. So if in Japan you end up getting a situation where interest rates go up a lot, I think it could end up being problematic because it would have a global impact of lifting interest rates, including in America. So I think those are my first two trends, which is that the AI bubble is being supported by a lot of liquidity still, and it could keep inflate. But keep an eye for the fact that interest rates could rise, especially by the end of the year, because this inflation persists. And this is something which I think could hurt the bubble as well eventually.
Exactly. It's for another reason, the interest rates could go up, which could burst the bubble.
Yes, eventually.
That connection is very important.
Now
your third forecast for 2026, that international other countries will outperform the United States. That US has become reliant on hot money, and it's more reliant than ever. If we look at how much foreign money is coming into America, it's gone up to 1.7 trillion. And it's really shot up recently. But its current account deficit has plummeted down to 1.3 trillion.
Yeah.
So it's just being covered up by, the deficit being covered up by hot money.
Exactly. And this is a very classic problem in emerging markets that we would see, which is that you sort of consume much more than you can produce. So you have a current account deficit. That's what a current account deficit is.
Yes.
That you're ending up consuming a lot more than how much you're producing at home.
Yes.
So you have to import a lot.
Yeah.
But the fact that you're financing that, like America has a current account deficit of around 3 to 4% of GDP, you're financing a lot of that by people investing in your stock market and hot money flows coming in there. Now tomorrow, for some reason, if these foreigners stop being this ebullient about America, and because the AI boom wanes a bit, because a lot of this is going into AI investments, I think then the concern will be what happens to this current account deficit. So that's my real concern.
And hot money.
Yeah.
It can go in and out, and out of your control. So the world will outperform the United States. That international markets are still much cheaper than the US. For example, world markets, international markets, much cheaper in terms of percentage than America. Emerging markets, even less, nearly 40% cheaper. India, not so much, only about 5% cheaper or even less than the American market. But world markets are so much cheaper than America.
Yeah, so I think that the point I'm making here is that the American deficit is being financed by hot money flows. And if something changes there a bit, the dollar could weaken a lot. Because if that mismatch happens, and generally when the dollar weakens, international markets tend to outperform. That's been the historical trend. In fact, the international outperformance already happened this year in 2025, or last year rather, because of the fact that the dollar was weakening. The dollar weakness could accelerate if there's a problem out here. And the point here is that the international markets still are trading much cheaper than the US. So they have a lot of scope to go up compared to the US.
Right.
So I think those are the 2 points together.
What's interesting for India is it's only 2% cheaper than America.
Yeah.
Other countries are 30%, 40%. So we are much more expensive than world markets and emerging markets.
That's why foreign investors are much more shy about putting money into India.
Because we are more expensive than the rest of the world.
Yeah.
Except America, where we're only 2% cheaper.
Yeah. So I think that India needs to get much more earnings growth and other things come back, the fundamentals for us to attract more foreign capital and justify the valuations we have. America's valuations are being justified today because of the AI boom. But a lot of other countries have just become a lot more attractive to look at. So Europe, even Japan, but a lot of emerging markets.
Emerging markets, yeah.
Yeah, as we discussed, Latin America and stuff are doing quite well, at least from a stock market perspective.
Right. Relative to America, they're much more attractive suddenly.
Yeah.
Yeah, okay. Yeah.